Good evening. This is Doc Severson for the TheoTrade report for Tuesday, April 25th. Well, the big news after market today is how the Nasdaq composite has hit a new all-time high, which is not surprising after this enormous cup with handle pattern is now breaking out to the upside. We've been pointing this out for some time now. If you take this pattern, if you believe in these things, right, there's about a 4,000 point depth to this current pattern, which means that the upside target is about that same distance and points to a potential Nasdaq target for this move of about 9,000. Now, it may take a while to get up there if it does at all, but obviously the stocks that comprise this index are really the growth story. Now, just an aside here, I recall back in I think it was around 2011, 2012 timeframe, we saw the same type of pattern. This is an inverted head and shoulders pattern showing up on the Nasdaq at that time. And I said, well, the target up here is about 4,000. And I felt kind of silly at the time, even bringing it up, thinking at this point that stocks are going to be heading back down at the time. But, again, that just shows you that, many times patterns will show you something that you're not necessarily ready to see. And a lot of people, especially those of the bearish ilk, are not prepared to see a cup with handle pattern with a target at 9,000 for the Nasdaq. So that's kind of the news today. But the real story is still with the S&P 500, because this is what's got to happen here. Now, I've talked about recently, if you've been listening to this report, I've been talking about recently about how the S&P has been in a nice little tight weekly flag pattern, which should break out to the upside, and then finally, as of today, really did. So it without a doubt cleared that trend line and had a lot of energy to be able to do this on the daily chart. So a daily chart breakout like this can easily power the market higher. And you could also kind of say that the weekly chart is got enough gas in the tank right now to be able to power a pretty decent rally. The X factor to me has always been this monthly chart down here at exhaustion, really begging for a deeper correction. But if you think about what's been going on here, we had an extremely rare signal with all three major time frames in absolute exhaustion by the end of February. I mean, this is a signal that I do not see very often, and when I do see that signal, it always generates a deeper corrective move. Now, whether or not that's, it doesn't have to be that much. Does not have to be that much. In fact, all I was looking for was just a simple, modest 4% move down to about the 2,300 level. We didn't even get that. We only got within just inches of 2320. That was about as low as this one wanted to go. So maybe a 3% move to the downside. That's all we're able to get. Now, here is the last saving grace for the bears. The last saving grace for the bears is if this move here, which was on good news, and again, remember, all the good news that we've seen for the past 6 weeks has been sold into, has been creating a selling event. So every time we see a positive rally from here, okay, here we go again. It's been a selling event, sell into the good news. That didn't happen today. So for the first time, that didn't happen today. So it's showing that the character is shifting back to accumulation again. And it was relentless today, with the exception of a somewhat soft close. So if the bears have any chance whatsoever of making this thing turn into a lower high, now a lower high, as I've been talking about lately, a lower high could create a lower high in the weekly chart, which would shift this into a downtrend on the weekly chart. And this would be relatively unexpected, especially after today. This would be unexpected and would be particularly vicious move to the downside. But something's going to have to come into play to create this to be a lower high. So what we have to watch for here in the meantime, in the short term, we have to watch for this resistance level right up here at 2,400. So that's at 2,400. We also have the Russell and the Dow. So let's look at the Dow here for a second. The Dow has got the same problem. And of course, They're getting all the attention. The Dow's getting all the stock media talking about the Dow. Nobody cares about the Dow, though. Everybody follows the S&P and the Russell. So the Dow's got this kind of 21,200 level to contend with. And then the Russell has got all-time resistance to deal with, just over 1,400 as well. And that's showing up right now at about 1415, and this has actually hit all-time new highs. But you can see that this is going to be a struggle up here as well too. Now what I find is that the Russell tends to be a little sloppier in terms of the levels. So really most of my effort is going to be spent watching the S&P and watching how that 1400 level is dealt with in the near term. Is that going to create a new high into all-time highs? And if so, that is going to be an endorsement of strength for the indices. If not, if the S&P 2400 level ends up being impregnable to the upside, at least in the short term, then that could lead to that lower high. That could lead to that lower high in a change in polarity to a downtrend in the weekly chart, which again is going to be unexpected and could be particularly vicious. So this is all in the scheme of a larger time frame uptrend. Okay, this would be very normal to see the weekly chart take the baton from the daily chart, pull into a lower high, pull down a little bit deeper here, and ultimately that would be better for everyone involved if the market hits a reset button. If it tries to get any kind of distance above 2400, I ultimately think that it's going to get hauled back down. Now, the last thing I want to bring up here is that a lot of people are talking about a government shutdown coming up here at the end of April. Oh no, there's going to be a government shutdown if we don't get it. Look, we've already been through one of these things before. We went through this 4 years ago through the first 2 weeks in October of 2013. So let's bring up 2013 here. So 2013 was a very similar environment to what we're going through right now, just an extraordinarily strong rally. Everybody's buying every dip, right? So remember how negative that event was back in 2013. Okay, here's the first 2 weeks in October of 2013. All right, what does that tell you? Do you think that this market has not already discounted a government shutdown, A, or B, does not really care about a government shutdown? Either of the two, I don't think it really matters right now. The market is proceeding as if none of this matters. In fact, all the skeptics are adding more fuel to the fire. All right, so that's it for today's report. We're going to be watching that 2400 level on the S&P and see how things go. We are not going to be surprised by either outcome in either direction. Thanks for listening, folks. Have a good night.